Compass Real Estate, which has been at war with the National Association of Realtors, at war with Zillow, disparaging my company, eXp Realty, and making us some story about what they're trying to do, and really trying to, I think, upset the entire real estate industry. They announced a plan to purchase kind of these old 1970s and 80s branded companies, Century 21, Coldwell Banker, Sotheby's, and others, so they can add to their heft to continue their march on, I think, destroying or disrupting the real estate industry. What could possibly go wrong with that? Let's take a look at that. You're going to see, for example, let me add this in real quick. Add to stage, there we are. Compass buys Anywhere Real Estate. Anywhere is the parent company that owns the corporate brands of these companies. Now keep in mind, local offices may be franchised or regions may be owned, agents have their own business, but the name of the company, the brand, is what Compass is doing. Now, are they buying Century 21 to build Century 21 as a brand, or are they buying it to destroy it and put it under Compass so they get more people to play their hide the listings games? We'll talk about that and I'll explain why I think that's really what's going on here. So let's take a look at the real estate industry. And this is a chart that I've done that shows the market capitalization, the value of the Wall Street stocks for major real estate companies. And you'll see here, the biggest is Rocket Companies. Now, Rocket is the company that owns Rocket Mortgage. And they recently bought, oops, I lost my spot there. They recently bought Redfin. So they're like a big player on throwing money around and trying to buy a monopoly and build a monopoly. Zillow isn't a real estate agency yet. It is, it isn't. But certainly it's sought to destroy the real estate industry and is probably responsible for more disruption than anybody else. Opendoor is an interesting case. They kind of came back from the dead. Not really sure what that's all about. You have Compass at $4.4 billion net worth as of Friday's close. And then this is my company, eXp. I'm affiliated with them and own stock in them, full disclosure. And then here you see the next one, Compass is buying Anywhere, 1.16 million market caps, about 5.5 combined market cap, would put them, the highest real estate pure agency company of any in the industry by quite a bit. And so, and then you'll see below that, Remax is about 194 million, has really dropped. Douglas Elliman, we'll talk to you a little bit about $272 million. So you'll see that the industry is really dominated by the Anywhere brands, by eXp and by Compass. Okay, so what is all this going to do? They're going to have 20% of all the real estate company agents in the United States, about 340,000 out of 1 million licensed agents will be under Compass. Well, we know that their goal so far has been to monopolize the industry by changing it from where realtors used to cooperate, the multiple listing services, the largest industry cooperation I'm aware of, and to a proprietary system where Compass agents hide listings from other agencies, and then the sellers are kind of strong-armed into marketing with them, or else they won't show their listings, and then they want to deceive everybody when they go on the market with them to pretend as though they weren't marketing them. I've covered this in prior episodes, but the whole thing to me is just dishonest. It's really just trying to fool your customers into thinking that you have their best interest when clearly it's the best interest of Compass and or the agents trying to double in the deal. They're using the customer's listing to get their next listing and the next sales. Now, after decades of the Justice Department going after real estate, I don't know why. I think that government officials hate entrepreneurs by their nature, and they love big corporations that pay them campaign contributions. And the frivolous lawsuit, which really affected all the brands that were around a while, they've been hemorrhaging money. As a result, you have a depression in real estate where you have maybe 5 million sales versus 7 million a few years ago. So we have about 30% drop in activity. No industry really can sustain that in the long run. Real estate's been able to. So the strategy here obviously is for Compass to take all the listings and then put them under one company as many as they can, and then hide them and make companies come to them to sell the property. And that was pointed out by Professor Mike Del Prete, who's a great resource. Contest King, the Compass and Anywhere deal, and explains the reason why in the Compass's own words is the most obvious benefit is to force home buyers to Compass agents for access to inventory they can't find anywhere else. They can't find it anywhere else because Compass is hiding it. It's not because they're getting a better deal. It's not because it's better for the customer, for the seller. It's not because it's better for the buyer. It's because it forces people to pay commissions to Compass because they're hiding the listings from everybody else. Now, one of the questions is, what does this do to competition? In fact, Housing Wire wrote the book, Does the Compass Anywhere merger close the book in competition? And the reality is, I think not. It does in terms of buying up all these brands, and now you have Compass and all these legacy brands, and then you have XP and other more tech-forward companies, I think. But what's going to happen, I think, is each agent makes the decision on what's best for their clients and for their business. And so Compass will try to strong-arm agents into, hey, if you don't work for us, you won't see the listings. I'm a listing agent, so I don't care. I want what's best for my clients to expose the property. And that's why I find what Compass is doing offensive. But it's not going to eliminate competition because you have a million realtors all running their own business. There's no way that Compass can strong-arm everybody into their business model. At least that's my prediction. So you have all these mergers, and this has happened before in real estate, and it's never really worked out because you can't fight a free market. And every seller wants top dollar for their property. Every agent wants to get, serve their client and get paid their commission. I don't think it's going to work out well. Now, in the short run, there's always momentum. And one example is Douglas Elliman. They're at the 5th or 6th largest company by market cap I showed you. They're going to now play along and compete with Compass, or attempt to, by creating their own hide the listing strategy. And I do think it's important to have such a policy for people who want to keep their property offline, maybe for privacy reasons or legal reasons. But it's not for the majority. It's not for a sizable minority even. But Douglas Elliman feels a need to tell their agents, hey, we have the same thing. Don't leave us for Compass because we have the same thing. And so that's what this is all about. There's always a lot of copycats. So what does this mean for buyers and sellers? Well, I don't think much. I think you'll have Compass agents and their new companies they bought trying to strong-arm sellers into hiding their listings so that Compass can pre-market them and try to double in the deal. And they'll tell them they're going to get a better price with no data to provide that. I've covered that in prior episodes. But the reality is agents at other companies who are stick by their guns and serve customers will have their listings shown to more people. And that's the key. The more people see a property, the more price the seller gets. I have a listing right now, actually a property where a seller owns, and I keep getting the neighbor wanting me to get a price for them so they can decide if they want to buy it or negotiate down from there. And I've said, no, at some point my seller will put it on the market, but if you want to make an offer and solicit it, make an offer. And it's always, it's a good tactic if you're investors to try to buy a property off market with as little information. And if you're a seller, you want as many people seeing your property as possible, as much information as possible. So all of this is I believe ultimately a losing strategy, because the one thing in real estate is, because it's so competitive, the North Star should always be what's best for your client. And Compass, by trying to institutionalize their policy, what's best for Compass, or what's best for greedy Compass agents, does not serve the customer. In the long run, customers won't be fooled often enough. And at some point, that whole hide or listing strategy will fall apart. Now, maybe by that time, Compass has bought up all these brands, and a lot of the weak agents will stay underneath them, and maybe it works out for Compass. But certainly for the sellers in the marketplace, it's not going to work. Okay, that's my take on that. What do you think? And please let me know. Let's take a look at the real estate market overall. And I would say that there's two parts to the economy. There's supply, and demand is going to be interest rates primarily, and supply is going to be inventory. So let's take a look at interest rates. And last week they inched, where did we end up here? 6.3. So it ends up sliding from 6.35, basically insignificant. But the prior week's cuts had created a lot of demand we'll talk about a little bit. So these rates are still very, very attractive to prospective buyers. On the supply side, how many homes are available for sale? That's inventory. And using, oops, we lost our spot here, using Redfin's data, we have 1.495 million homes on the market, with sales of about 5 million this year. That's still sufficient supply. The problem is we don't have enough houses, and we don't have a strong enough economy because the interest rates are artificially still high to change those numbers dramatically. So the inventory is so low. And here's the thing: as a buyer, you don't need to worry about the housing market dropping dramatically unless something changes, because there's not enough houses in the market to sell. There's not enough sellers to cut the price to have a housing bubble or for prices to drop dramatically. And then lastly, I use Altos research that gives us a number. Ooh, this just changed. Look at that. From the time I set up my email to recording it, it went from a 35, it was a 34.71 to 34.46 rounding down back to 34. It's been in that range here for the last few weeks. Basically in LA, we have a slight seller's market, and it's been bobbing back and forth between slighter and a little less slight, if that's a word. But yeah, I did this morning, and in my email, I was going to go up with a 35, and then here by the end of the day, went back down to 34.46. So the market in LA has softened from a strong seller's market to a side seller's market, which means if you're a buyer, it's a good time to take a look at buying property, take advantage of the lower rates and the higher inventory in the LA area. A couple other metrics on where the market is today I found, and just want to kind of talk about a little bit. Showing time, this is a metric that you might think about. Showing time is a company that has electronic lock boxes. They're one of the 2 largest providers. And so they put their data out since they've been around, and it's been increasing year over year. Now, what's interesting is how home sales have gone down during this time period. So either more people are seeing houses per sale, not true, or showing time's business has increased more than the housing market has. That is true. And so this isn't a very good statistic to compare years of sales, but you'll notice these trend lines, and the trend line's continuing, where peaks around the summertime and then drops through the rest of the year. And that's happening this year nationally. It started earlier here in Los Angeles. It started earlier this year nationally even, I think, than in years past. But that trend line is true. But again, don't use this as a factor to show home sales are up, because showing time's business has increased. Good for them. But that doesn't mean there's more people buying houses. Now, another interesting statistic I saw was Google searches on the word homes for sale. And this goes over the last 5 years. During the pandemic, interest rose quite a bit. In 2022, continued. And at this time, we had about 75% of where we are now, being at the 50% level. So it's interesting that, the interest in buying homes has dropped. And this goes along with what I've said in the past, that our economy has made it harder for people to save money. Less people are forming families, which drive that. And there's less homes being built. And so all that's reducing, I think, the desire for the American dream, which is a bad thing. I think we want people that want that dream and to work for it, and that will force changes in our economy. But you can see overall that the interest in owning a home has dropped dramatically over the last couple of years. So something to pay attention to. Okay, another interesting factoid. Business Insider, behind the paywall, so I'm not going to be able to show you. Let me see if I can real quick pop them. The housing market could see an extra 500,000 more sales next year as rates drop. And you use this service to get behind the paywall. But what it tells us is, because the rates are projected to go down below 6% next year by Fannie Mae, they project an extra 500,000 home sales. And I've been saying this all along. The interest rates are artificially high. I showed that a couple weeks ago. When you compare treasury bills to mortgage rates, they're being held artificially high by the Federal Reserve. And they're losing their grip a little bit, or lightening their grip a little bit, maybe put it that way. And as that is expected to continue, the drop in rates, I think we're expecting now several 0.25% drops, and you factor that in to getting rates below 6%, you're going to see about another 500,000 home sales purchase. Good news, I think, overall for home buyers. So we'll see how that plays itself out over the next few months. And then here's another one in California. If you follow the news, you follow the governor, you're going to hear, hey, we're passing all these laws to make it easier to build houses. San Francisco Chronicle asked the question, are the new laws speeding up California housing permits? Spoiler alert, no. In fact, they quoted a study by Adam, which is a real estate data company, great company. This says about 102,000 new homes were approved last year. Now, these are new homes, not permits for remodels. 102,000 in the whole state for a year. 10,000 fewer than the prior year. So actually our permit process has gone down from the prior years. And then you look at the numbers. California, we approve about 258 units per 100,000 residents, whereas the average in Sun Belt states is about 435. And Texas, 722 per 100,000 agents, 100,000 residents. So what you can see is that California is purposely building about half the inventory of healthy states and about a third of the state of booming states like Texas. There was a time when I started the business in '85 that we were building a lot of houses in California. And that's what drove our strong economy at that time. And now we have this bifurcated economy of very wealthy people in the few houses that are left, and we don't add new houses for people to buy. And that's why companies are moving out of state. So again, the numbers don't lie. We are just not approving enough new homes for our economy. Interesting factoid, you may have followed my podcast, Real Estate Ripoffs. I talk about Zillow all the time as being, I think, a force of evil. This is Wall Street money destroying Main Street money. And Zillow is on track for the first profitable year since 2012. That might shock you. A company is worth $19 billion with numerous millionaires on their payroll. and they never had a profit, being worth $19 billion. Meanwhile, people have made billions of dollars investing in them. Meanwhile, getting paid salaries of millions of dollars to work for them. Meanwhile, disrupting the real estate industry, which is another way of saying, in my mind, cheating the economy out of good people's businesses, destroying people's businesses. And this is kind of like Amazon destroying local booksellers, and also left as Barnes & Noble and Amazon. Zillow has destroyed the small independent real estate companies, not by putting them out of business entirely, but by limiting the profits to where companies are now buying them on the cheap at a fire sale price, because those companies don't have the capital to reinvest and build their companies. And here Zillow has not been paying taxes. Well, I'm just curious, anybody here watching, if you didn't pay taxes, you put your tax money in a bank account over a 15-year period, what would you be worth? I'd be worth a lot of money. I would love to have not paid taxes and invested that money in myself over all that time. But and you might say Zillow's smarter than me. I'm going to bet if I went through their tax deductions, we would all agree there's things there that are unreasonable, and as a result, they are taking advantage of the system. And they can only take advantage of it if we allow them to. And so I would say, as a citizen, be aware these are companies that are destroying our businesses, and that we need to hold them accountable. Speaking of accountable, City of Los Angeles has lost, where it went, billions of dollars on housing and homeless housing, right? We have this tax on the rich and any other property, commercial, multifamily, over $5 million. We have this new tax to help the homeless. We haven't built any homeless housing. I've documented that every week, how few houses we build. The more people are dying on the streets of Los Angeles. That the fastest way out of homelessness in LA is dying. More die in excess of normal citizens than get placed in housing. And so you might think the city would say, hey, where'd all the money go? We have a controller. He's an elected official designed to check our accounting. And he actually posted recently online saying, hey, I'm the controller. I'd love to audit where the money went, but the city won't let me. They paid an outside audit company who's never done an audit before $3 million to find out where the money went. And guess what? They don't know where the money went. So only the city of Los Angeles would waste billions of dollars. Then, in order to find the money, pay an unqualified contractor another $3 million, while they have employees on staff and not use them to do the job. This is what happens in the city of Los Angeles and why we're where we're at. Another last interesting piece of news I have this week is it's from the AP, but it's really Adam data source. Adam is a data provider, and they track numbers across the country, and they put profit margin on flipping house is at a 17-year low due to high prices. And what the document is that the gross profit, meaning from where the investor buys a property and sells it, not counting their expenses and carrying costs, has dropped to about 25%. So they're buying properties at $300,000, selling them at $400,000, and that $100,000 is their expenses on improvements, carrying costs, financing costs, closing costs, sales costs, and the profits are very thin. And I see this as a real estate investor, as well as a listing agent, that investors are always coming to me looking for properties because there's very few opportunities, very competitive. Costs of everything have gone up. Cost of the house has gone up. Cost of the labor has gone up. Cost of materials have gone up. As a result, very, very difficult market. And these are people who take properties that are dilapidated and bring them up to market and create more inventory. And so if we don't have an active flipping market, it's just another way. We're not building new houses. We in LA have burned down houses. We're not rebuilding the houses we burned down. So you might think that we would encourage investors to buy the old houses built in the 1920s and 30s and bring them up to code and standards and bring them back to market. But no, we're not even doing that. The margins are just so difficult, and the taxes and the fees and such. So anyhow, what do you think? If you're an investor, is that what you see? I'm sure you do, because I talk to investors all the time, and they'll tell me how tough it is. Well, anyhow, that's my real estate wrap-up this week. If I can help in any way, if you have any questions, comments, put it in the comments below. Reply here. As always, if I can help you, @BillGrossProbate on social media. Make today your best day ever. Thanks so much.